and welcome back to Never Change. Here I intend to go through my Nvidia analysis. If you like this content, you got something out of it, then please hit that like button. If you'd like to see more of this style of analysis, then please subscribe. I try and release at least one stock analysis a week. So what is Nvidia? So Nvidia is an American multinational technology company incorporated in Delaware and based in Santa Clara, California. It designs graphic processing units for gaming and professional markets, as well as system-on-a-chip units for the mobile computing and automotive sector. Founded in 1993, has approximately 18,000 employees and an annual revenue of 10.92 billion. And CEO Jensen, since the foundation of the company, is pictured here in his legendary leather jacket. Competition. So Nvidia has competition from AMD currently. AMD do provide performance GPUs into the market, but as you'll see later on, they're nowhere near the market share of Nvidia currently. If they can ramp up production, then they could possibly become a true competitor, but in my opinion, not at the moment. AMD is more of a competitor on the CPU market to Intel rather than the GPU market to Nvidia. Intel. So Intel will become a competitor because they've made it no secret that they're entering the GPU market. They have a discrete GPU already, and they're looking to release their mid-range card sometime this year. So let's get into the analysis. Credit rating. So both Moody's and S&P both consider Nvidia to be upper medium grade, which is low credit risk. So common size analysis. So some good pointers here. So revenue has trended up on average year on year. Cost of goods and services has trended flat year on year, which has resulted in a uptrend of gross profit. So even though revenue has increased, they haven't had to increase the costs of the goods and services in order to achieve that high level of revenue, becoming more efficient with how they deliver their goods and services. The operational expenses has trended flat, which in conjunction with the increased revenue is good. And also the net income has increased year on year apart from the dip in 2020. And also what I like to see is a year on year increase in R&D, which they have here, which is trending pretty much flat in regards to how much they spend on R&D in terms to percentage of revenue, but as you can see, it's still increasing year on year on average. And also net flat cash flow also increasing year on year. Earnings analysis. Nvidia has beat the analysis consensus on every quarter in 2020 and also the first quarter of 2021, and by quite a margin. And financials, you can see an increase in revenue year on year apart from the dip in 2020, but all trending in the right direction. So let's see how protected this company is. So over an average of 4 years, EPS has achieved 8%, OCPS has achieved 13%, revenue 14%, and BVPS 23%. So we're looking for a 10% on average. It's achieved 3 out of the 4 and only marginally missed EPS. So nothing really to worry about there. We may want to check the EPS on other semiconductor companies to see if that is about average. So let's see how management are managing the company. So return on equity and return on invested capital. So return on equity stands at 19%, well above that 10% that we're looking for. Return on invested capital is 26%, so well above that 10% we're looking for. Debt to earnings ratio currently stands at 1.3 years, so no issues with long-term debt. Margin of safety, so based on today, which is the 28th of the 4th, they had an EPS 12 trailing months of $6.9. Analysis consensus of future earning growth rate at 25%, and a future PE multiplier of 40.29%. A minimal acceptable return to us would at 15% and a margin of safety of 25%. So that resulted in a sticker price of $639.98, which they are not far from at the moment, and so a margin of safety at 25% would be $479.99, and a margin of safety at 50% would be $319.99. So the chances of Nvidia dropping to $399 a share is slim to none, I believe, but you never know, could happen. The chances of it dropping to $479 a share is possible, as you'll see soon enough. So based on a margin of safety of 25%, so around the $479 a share, you can see that over the past few months, so since September, Nvidia, the stock price has hit that point on at least 3 occasions and is currently trading up towards its valuation. So it's probably, Nvidia is overpriced at the moment, as you'll see from the PE ratio soon enough. So it's at the very high end of its valuation, of its overpriced valuation. So if I was, there's probably more sell pressure at this price than there is buy pressure. So wouldn't probably advise buying in at the moment. Just wait. So 8-pillar analysis, so let's check out the foundations. So I have it passing 5 of the 8 pillars based on a share price at $613 a share, which give it a market cap of $387 billion. So PE ratio looking for less than 20, it currently sits at 88.97, so very high. Profit margin looking for 10%, it currently sits at 25%, it's pretty good. Revenue growth, yes it does, 14% year on year on average. Profit growth, it does, 35% on average. It is increasing its outstanding shares only by a small margin, but it is increasing. And liabilities currently sit at 41% of the assets. Free cash flow is growing year on year, on average about 37%, but price to free cash flow is definitely above that 15 or 20 ratio that we're looking for at 78. Does indicate that this stock is quite overpriced at the moment. So even if you run through the pillars again, we're using a 25% margin of safety, so based on the $479 a share, so based on outstanding shares at 617 million would give a market cap of 296 billion, and using the free cash flow of last year of 4.9 billion, the PE ratio would still be 68.36, and the price to free cash flow would still be well above that 20 at 59.66. So still overpriced. So pros regarding continued growth. So there's a massive opportunity for growth if they can get the acquisition of ARM past the UK, EU and US regulators. And it would be a great step towards being able to create an Nvidia ecosystem of GPU and CPU. The massive demand for GPUs isn't going to go away anytime soon. It's going to remain high for gaming, workstations and crypto mining. Nvidia is still considered the best in my opinion, and in the opinion of quite a lot of others. It has huge market share compared to the competition. It's heavily investing in AI, so looking to the future, and the crypto boom is still booming. It's no signs of stopping anytime soon. So the GPUs are flying off the shelf as fast as Nvidia and their partners can make them. Limiting factors. So Nvidia are going to be limited by Samsung. So Nvidia can sell GPUs as fast as they can make them, but it's down to Samsung and their 8nm process at the moment in order to ramp up, to scale up, in order to meet that demand. And if they're looking for a 25% growth year on year, can Samsung also maintain that 25% growth year on year? And if they choose to go to TSMC and use their 7nm for future products, same, TSMC doesn't have any spare capacity at the moment and are looking to scale up. And to bring new semiconductor fabrication units online and calibrate them, and also purchase the very specialized equipment from companies like ASML, it takes years. So the semiconductor shortage in space for fabrication is not going to go away anytime soon. So like we said before, competition from Intel looking to release their own GPUs. Now Intel does own their own fabrication space, so that might become an issue for Nvidia in the future. More of your own value chain that you own, the more efficient you should be. Not always, as Nvidia has been struggling recently and stuck on 14nm. Competition from AMD, but only if they can scale up with their partnership with TSMC. You can also see from the market that the way Intel are trying to bring their own GPUs to market, AMD are already bringing their own GPUs to market. Ecosystems are starting to be produced. If you've got, as an example, an AMD processor and an AMD GPU, it's within AMD's interest to make sure that if you own both a CPU and GPU from AMD, that they work better together in some way, like sizable bar, for example. So you'll be able to see that happening in the future. As mentioned before, their acquisition of ARM faces a lot of hurdles. So if they can get that past the regulators, that would definitely give Nvidia a leg up on the competition. And also a limiting factor would be a crypto crash. So if the crypto was to bottom out like it did in 2017, all of a sudden you would have thousands of used GPUs hitting the market. To lose that whole mining sector would be, in my opinion, a massive blow to Nvidia at the moment. So as mentioned before, I just thought I'd quickly show market share. So as you can see from this, so this is the lower end offering from Nvidia on the left, AMD on the right. And this is a website where you can go on and do benchmarking. And so it's recorded 48,316 unique benchmarks for the low end Nvidia offering, and just 3,692 for AMD. Now, if you're a gamer or you need a workstation and you're buying these types of GPUs as soon as they hit the market, one of the first things you're going to do is benchmark them. So this shows to me that AMD is not a threat at the moment. If they could ramp up production, they would absolutely be a threat, but not at the moment. And if you're interested in seeing a review of AMD stock, please click the link above, and that will take you to my analysis of AMD. This is the mid-range offering, so 3070 on Nvidia side and 6800 on AMD side. Again, you can see by the numbers, 167,000 on Nvidia unique benchmarks versus 6,500 on AMD. And flagship offering 3080, 112,000 versus 9,000. And this probably doesn't include miners, because miners who buy the top end GPUs, or any GPU they can get their hands on at the moment, are probably not going to benchmark them. So you could probably add quite a lot to the Nvidia side. So my conclusion, so credit rating, nothing to worry about. Common size analysis, nothing really to worry about. Moat analysis, fine. Return on equity, return on invested capital, all fine. No long-term debt issues. They did only pass 5 of the 8 pillars, which indicates that there may be a pricing issue here. But Nvidia has good potential for growth. It does have viable competition from competitors, but they still lack in regards to being able to bring GPUs to market in order to impact Nvidia's market share. Nvidia's biggest problem will be the bottleneck factors from its value chain on areas that are not in its control, such as semiconductor wafer fabrication, which it's reliant on Samsung's ability to upscale, or TSMC if they move back to TSMC. So that will have an impact on Nvidia, in my opinion. So the current share price, so at the time of filming this, is $611. It's at the high end of its over evaluation, if in my opinion. A good share price for Nvidia would be somewhere between $470 and $500. That would be using a 20 to 25% margin of safety. So in my opinion, at this moment, for what it's worth, wait. So that concludes my analysis of Nvidia, and if you've got something out of it, please hit that like button. If you're interested in seeing my analysis of another competitor, or soon to be competitor, is Intel, please click the link above. That'll take you to that stock analysis. Other than that, thank you for spending your time here. Please drop a comment if you suggest a stock that should be analyzed, and hopefully see you again. Thank you, goodbye.